As we enter the final month of 2024, will the stock market spread Christmas cheer? Hello, and thanks for joining us for this week's Fastest 4 Minutes in Finance. I'm Scott Inman. Stocks soared in November, fueled by a decisive presidential election and really following seasonal trends. The 5.7% gain in the S&P 500 index in November was the strongest monthly gain of the year. And that's not really surprising because November has been the strongest month of the year on average going back to 1950. So can we expect more of the same in December? Well, historically, the answer is yes. December is on average the second best month of the year, behind only November. Let's take a look at a chart from LPL Research. This highlights the average returns for each calendar month since 1950 over the past 20 years, the past 10, and the past 5. The average long-term gain in December is 1.6%. It's been a little weaker over the 10 and 20-year time frames, but it's made a comeback over the past 5 years, trailing November and July as the third best performing month. So let's take a look at probabilities in another way. December may not always be the strongest, but it has been most often positive, more so than any other month. This chart shows us the percentage of times since 1950 that a month has been positive. And you can see December leads the way at 74%. Now, this is one of the reasons why the term Santa Claus Rally has been coined, referring to the positive stock market gifts that usually come around Christmas time. That brings us, though, to our final chart. It's also called the Santa Claus Rally because December is historically stronger in the back half of the month. This LPL chart shows December performance in the first half of the month since 1950, the past 20, 10, and 5 years, and compares it to the second half of the month over those same time periods. You can see it's not even close when comparing which half has been stronger. In fact, the first half of the month has even been negative on average over the past 10 years. Of course, every December has its own underlying economic conditions, and no matter if we get a Santa Claus rally or a big lump of coal in our portfolio stocking, investors should stay focused on their long-term goals. 1 month will not make or break your financial independence. 1 year won't, but not staying invested will. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.